Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, and we are now on the 5th of April, 2018, in the time frame that we're at right now, about 4:44. Wanted to get this in so you can see an 8-cent gain in the corn, wheat up 9, bing, 16 in the soybeans, and that's it. The exchange starts erasing all the boards, and that's where we go. The point I wanted to make, if I had more time, was we had a good move up in the stock market today. We had a risk-on mentality come in as traders digested yesterday's Chinese numbers for the tariff. Then they thought about it and decided, hey, that's down the road. That's what they would do if we do ours. And the market just overcame it. You can see that in the beans you are still down 13.5 for the week. So we haven't completely overcome everything. We could end up stronger, but don't know. Right now we're still down 13.5. You can see how when the market got to 10.15 on a close, it's bouncing up and it's knocking on the door right now of the 18-day average of closes. So that is another thing to keep in the back of your mind. We had an inside day after yesterday's wildness in the marketplace today. I don't know how to comment on it other than to say that yesterday was a record volume day for options in agriculture according to the CME group. I think they did over 3 million of them, did something like 800,000 before the markets even came to regular hours. So overnight trade was huge on it. And as you can see, the market now trying to figure out what does it do with this pattern. And this is the pattern that you have. I could take this low now and put it down here. In fact, that's the right thing to do. It should be there with the swing line up where we're at right now. It'd be off the chart, but that's what you've got. The more important thing that I want you to focus on is not that the swing line has got the arrow wrong. It should be down here. It's still not a pattern of a higher high and a higher low or a lower high and lower low. What is important is if we come back, we see that this was Tuesday's action. First support, 1035. If it gives ground, a potential support could come in at the closest of the 100-day average or the lower Bollinger Band. Let's stick with the moving average for a moment. The market sliced right through the 100-day, but then came back and closed over it at 1011.25. If the market rallies, I'm looking for then resistance to be up near that 1032.5 area mark, the 18-day average of closes. You got to 1034 today, went right to that number, as you can see, and it stopped. So as much as the market overreacted, and that's clearly what it did, it overreacted to the Chinese tariffs, and has pulled back, you haven't changed anything. Yeah, you wiped out a group of longs. Yes, you've come back in price, but you're still hanging around that 18-day average of closes. When you come to the Bollinger Bands, you can see yesterday the market closed over it. Guess where the breakdown today went to? Right to the lower Bollinger Band, held it, and then you came up to the 18-day average of closes. So we're starting to develop some sideways action in those Bollinger Bands because of it. Momentum-wise, you have the market pointing up. So here's what you've got. You have no trend, that's for certain. Why? You got a higher high and a lower low. Number two, where's the bias? It's down because you're still under the 18-day average of closes, 1031.2 versus 1032.25. And momentum is pointing up. If you're asking me what to do with a chart like that, I don't see a darn thing to do with a chart like that. In the meal market, you have the higher high, lower low pattern, like soybeans. The market was able to stay up yesterday over some key averages. It didn't even get down to its 100-day like beans did. And now it's getting into an overbought area up against the upper Bollinger Band. In the oil market, you now have a pattern of higher lows, higher highs, momentum pointing down, and prices under the 18-day average. You talk a mess, the soybean complex is a mess. That's the only thing I can say. In the corn market, you have a double bottom at 372, getting into an overbought area. Let's assume the market can add to these gains. Maybe it can get up another 6 cents to the upper Bollinger Band, but I'd certainly expect to see pros taking money off the table there. The wheat market, Chicago wheat especially, is being pulled along by Kansas City wheat, where the drought conditions and the hard red winter wheat are terrible. They're staying where they're at, and now they're going to get a blast of cold weather, single digits, they're saying, in some areas where it's grown, and then 10 days of dryness. Can't be good. But how far do you pull Chicago wheat, where there's more than enough of it around the world, higher? That's going to be the thing. Did it turn up? Yeah, the trend turned up tonight. You got higher lows, higher highs. Unless the market falls right below 461.5, this market's looking more and more like it's trying to put in an upside move. In the sugar market, you remain oversold in a market that's got lower highs and trying to make higher lows. You're stalling out against the Bollinger Band, and you can see that if you come right to this day, I believe. This low is 12.18. Now you come down, and 12.22 is your new low. You resume that trend if you get under 12.22. The problem has been the market has stayed oversold during this whole pattern, and while it looks like it's going somewhere, it's not going all that far. It's just sort of arcing around, still bearish. In the coffee market, another challenge of the 18-day average happened today. The market got to 118.40. That number is going to be 118.45. You round down, and you're knocking on the door. However, you're so oversold, I'm not convinced the pros are defending their short position. You need to either embed or get away from that oversold condition. In the cocoa market, Bollinger Band top, take a look. Market pulls back, gets under 24.90. You lose your trend, momentum turning down, Bollinger Band bottom. You go for 24.40 is the low on that day. Then today, 24.33 low hits the Bollinger Band. Didn't hit it the day before. Back here, you missed it. You were pretty darn close, 8 points away. But today, to just make sure it was done, it gets down to that number and goes right back to the 18-day average. I have found charting so difficult the past few days, it's insane. I'll give you a great one. Here you go down in the cotton, and if you take a look at the lows, you're near limit down. Okay, so here you finished the day down 238 points, down in between the lower Bollinger Band and the 100-day average. The rationale, we do a lot of cotton export, of course, with China, business. So today, remember, I don't know why cotton didn't bounce yesterday. It had time to do it. As the stock market picked up momentum, today people came into the marketplace shaking their head and going, no, let me come back to that. No, I don't think so. The market just opened higher and then went right back to its 18-day average, but the gain, 293 points. So what you did is you had wild swings in the markets, down 238, up 293, and in the process, now you've still got the pattern of what? A higher high and a lower low. You never did hit the 100-day average. Momentum is up. The bias is up. If the market can clear 82, 81, maybe the 8,400 levels, the next zone. Pretty wild how fast the markets changed and said, oh, well, that trade war with China, that's not a war that we're really talking. It's a negotiation. Cattle market responding the same way today, just the way it did yesterday. Feeder cattle went right to the 18-day average. This was the market that gave the right signal, though. This market lost its embedded reading, and from there it made a run for the 18-day average, and it did it quickly. I think the market now has to tell us what next, and that's what we'll be waiting on. In the hog market, more follow through to the upside there. Now, please understand, I tried my best yesterday to make you understand that this trade war talk is like a baseball game. Let's give it 9 innings. We had our first full inning finish up when first the U.S. announced tariffs. Now China did its tit for tat. Now we're going to get into the day-by-day blows, which are the remaining innings. And no, it's not going to be a laydown. The president today in speeches saying what a great guy President Lee is. That's right. However, the president also said President Trump represents his country, President Lee, his country, and we're going to see where it all goes. And that is the way that this is all going to go on with that. So you're going to see these men fight it out. They're going to say no. They're going to say yes. I want 20. I offer 5 maybe, and they start chopping it away to see if there is movement. If you get what the president's asking for and you get no movement, which I doubt, but you get no movement, you're going to have a trade war. Get enough movement, you avoid it. Don't get enough movement, you're probably going to get a trade war. Nobody knows where you're at right now. But we're going to write about it on a regular basis, and we're doing that already. Especially if you're in the grains, you want to keep up with what's going on now in our grain comments. We have staff that is talking to people in the hard red winter wheat area, trying to figure out just how bad the situation is, and it's bad. Argentine's situation hasn't really gone away. Now they're going to be telling us more about the crops. We'll have all that. And, of course, what about the trade wars? We cover everything, and all this comes right into your email. And it's all day long. I mean, pick the categories you want because we give a lot of information. We want you to see it because we want your business. You're not buying that. Trade through us. That's how you earn it. How do you get this? Give us a call. Go to our website, www.iraepstein.com. Go up here, click here if you're on YouTube, or underneath us in some websites it says, click here for Ira's free information. I'm Ira Epstein. I'll see you tomorrow.